Welcome to another lesson of Microsoft Excel. Now, in this lesson, we're going to learn about IRR. So, what does IRR mean? IRR means irrational, or my bad, internal rate of return. So, what is internal rate of return? Okay, so you might think that why do we have to learn it? So, it's not that useful for people that are not in the business, but IRR is really helpful those who are doing business and which the people who need these type of stuffs in their career section. So IRR, as it is the internal rate of return, so an array of a reference to cells that contain number for which you want to calculate internal rate of return, okay, which is the internal rate of return or also the percentage of the return. Let's say profit, okay, profit or the percentage, okay. So the values must contain at least one positive value and one negative value to calculate the internal rate of return. IRR uses the order of values to interpret the order of cash flows. As you can see that it said that you need a minus value, which is a negative value, and then the positive values. So why do we use negative values? So negative values, why we put negative is that it's the cash flow, okay? So the outflow of the cash is termed as minus and then the value, and these are the like inward, okay? This is the outflow, this is the inflow of cash, okay? So this is why we need a negative and then the positive ones. Now let's say for this the capita of my bad capita of cost is, let's say the capita of cost is 5%, okay? Now we're gonna find out what is the IRR of this, okay, this value. So it's gonna find out what's the rate of, if it's below 5%, so it's a loss, the project is running on a loss. But if it's above 5%, it's gonna be running on profit. So the more profit or the difference of from 5 to higher, okay, which number it gets is the profit or loss, okay? So what I'm gonna do first is use the formula, but before that we're gonna like tell you how you're gonna use the IRR function. So in Excel you're just gonna type in equal IRR, so that is how you can find it, like IRR, okay? So I'm gonna cut it for now as I don't need it, because I'm gonna like just tell you what the IRR is in simple terms. So in simple terms, that internal rate of return is a metric like which is used to estimate the return on an investment. So the higher the IRR, the better the return of investment, or also termed as the profit. As the same calculation applies to varying investments, it can be used to rank up all investments to help determining which is the best. Okay, so is the IRR rate good? Okay, so as it tells you that how profitable an investment is, so the IRR is going to be higher in percentage, okay, in return which you're going to get the result. So in the world of commercial real estate, for example, an IRR of 20% would be considered good, but it's important to remember that it's always related to the cost of the capital, okay? So another thing which you have to keep in mind, that even if like something is like relating to you, that what does 30% IRR mean? So if an IRR is like 30%, which means the rate of return of an investment using the project discounted cash flow will equal the initiative investment amount when the net present value and PV is 0. Okay, so in this case, when the time value of money factors are applied to the cash flows, the return IRR is 30%. Okay, so now I'm gonna do is type in equal IRR and then open tab, and now you're gonna do the value. So the whole thing is gonna the value, because why is the whole thing a value? The whole thing is a value because according to IRR, you always have to put negative and then positive values all together. Without the negative and the positive value, it's not going to show you the outcome, okay? So what you have to keep in mind, that you should always have the negative value, which is the cash outflow. So that is just done, and I'm going to do is just close the parentheses. That's it. Just then press on enter. So you can see that this is minus 6%. So obviously that's like 10-11% loss. Okay, let's say if the income, or let's say the investment amount, okay, let's say the investment amount of the guy was 10, okay, $10, but this guy had to pay another $11 as like the loss. Okay, now what I'm gonna do here is, let's say we're gonna do more. Let's delete some. It's a number value, so it can't find anything. Now I'm gonna do is do it again, equal IRR, and select the cash flow, close the parentheses, hit enter. And this is the number value because this is not adequate enough. So this is 60%, 62% minus. Let's say 20. Now it's just going on loss. Okay, so let's say this one. So when you increase the amount of inflow, you will see that it's gonna be running on profit. Okay, so if I have this profit, so let's say this is the amount invested. Okay, so if you already get like 36,003, okay, my bad, $3,63,213, let's say this. Okay, and you're gonna get it for the first year, you got like 2,424, and then the second year you got like 24,237, and then the next year you got 4,37,354. So, and 42,424, and then and the seventh or the sixth year you got just two of them. And if I increase it more, you will see that the IRR will increase one by one. So this is how you can get. Now you can see that this is 10%. Okay, so this is like 5% more. So if you add in 5% extra to this, so it's gonna show you, let's say this is 100%. Okay, let's do this. Let's divide it. 36,300 to 1,3. Okay, now what I'm gonna do is divide it. So I'm gonna do is equal, let's say my bad, I'm gonna do is divide it. Okay, let's put in 100 first, and I'm gonna do is equal the IV, my bad, I'm just gonna do is select this one divided by this one. So this is it for 10% maybe, or maybe like one of it. Okay, so if it's divided from by 100, you can see that this is 1. Okay, so this is 1%. So I'm gonna do is 36,000, I'm gonna multiply it by 5 equal this one multiplied by 5. So this guy got a profit of 18,160 in the IRR. So this is how you can find out the percentage of IRR, or also called the internal rate of return, by calculating in Microsoft Excel. So what I'm gonna like suggest you is practice it a bit more, because this is a really important type of function which you need to know when you're going in a sector of career like business. So hope you understood everything, and thank you for watching this video.